Q1 FY14 may not be as strong quarter as it historically is for Indian IT. No material uptake in the demand environment, especially for discretionary services, as witnessed by Accenture and Oracle, will lead to tepid revenue growth across IT cores, barring a few. Cross currencies are expected to have a negative impact of 50 to 90 basis points, which would further impact the reported dollar revenues. On the flip side, average rupee depreciation of 3.3% quarter on quarter will have a positive impact on the reported rupee revenues. For the Tier 1 IT pack, the divergence of performance is expected to continue, with TCS and HCL Tech leading the growth with 3.4% and 2.8% quarter on quarter dollar revenue growth. The weak traction for Infosys and Wipro is expected to continue with less than 1% reported dollar revenue growth. From our mid-cap universe, Mindtree and KPIT are expected to lead the growth with 2.5% to 3% reported dollar revenue growth. Despite the strong rupee depreciation, the OPM performance of our coverage universe is not expected to improve materially due to wage hikes, which are at Infosys, TCS, KPIT, and Persistent, visa costs, which will impact all the companies, and sustained investments in new services and geographies. On the guidance front, considering the fragile discretionary spending environment, cross-currency impact, we expect Infosys to reduce its guidance to 5 to 8% from 6 to 10% earlier. Focus is expected to be less myopic considering the return of Mr. Narayan Murthy and be more on the strategic changes being brought about. For Wipro, considering the management expectation of growth pickup in Q2 FY14 and ramping up of recently won deals, we estimate the Q2 FY14 dollar revenues guidance to be in the range of 1 to 3%. Expectation of a relatively tepid traction in seasonally strong quarter, weak results from global majors like Oracle and Accenture, and increasing overhang of the new US immigration bill do not bode well for the sector. Also, any exuberance on the material rupee depreciation would be unwarranted considering the operating margin headwinds noted above. Management commentary on credible demand revival, especially after the positive economic indicators in the US, outcome of the immigration bill are the key drivers in the coming quarters. Consequently, the next couple of quarters are expected to be critical from the sector perspective. We remain selectively positive on HCL Tech, Wipro, Tech Mahindra, KPIT, and Mindtree. Thank you.